Well, good afternoon, and thank you very much for joining us today for our second in the series of F&O webinars. Today is going to be all about credit management, and I'm delighted to introduce Paul Sinnott, who heads up our F&O practice. He's going to be taking you through a demo. So over to you, Paul.
Great, thank you. So for some of those who are joining for the first time, this is the credit management session that we're looking at in the modernising your back office finance functions with Dynamics F&O. A few weeks ago now, we had the streamlined procurement session, which is available on our YouTube channel on demand if you want to catch up on that. This session is also going to be recorded and will be available on there as well, and all future sessions will be as well. But just to give you an overview, some of the ones that are coming down the line, we've got capital management, something going on around the effective month-end close processes, and a cash is king focus session as well. There will be other sessions dotted in and around that, but in terms of this series specifically, that's what we're focusing on for the imminent upcoming sessions. Just before I go a little bit further, just a little bit more about me, because you're going to be hearing me talking a lot now for a while. So I'm Paul Sinnott, I'm the F&O practice lead at Tysky. I've been involved with Dynamics ERP for over 8 years now, and I specialise in architecting and delivering business transformation utilising the Dynamics 365 stack, primarily the ERP, so F&O, but also utilising the wider Power Platform as well. Okay, great. So what I plan to take you through today in the time that you've spared for me, thank you very much, is I'm going to give you an overview of the customer credit limit management, so how we can assign, manage, update customer credit limits, the order processing, credit settings and the controls, so how can we apply the credit limits and other rules and business requirements that we have to our order processing to manage our exposure, give you an overview of the collection activities, and hopefully at the end we should have a bit of time just to touch on something a little bit away from the topic, but something that I think, because with a lot of the subjects we're touching on are producing output documents, something I thought would be really valuable to call out a real strong feature out of the box that's available, which is the configurable business document. So I'll touch on that towards the end as well. Without further ado, I will jump in. So this is Dynamics Finance and Operations. So for those of you who haven't seen this before, we have the homepage, which shows all the out-of-the-box workspaces, any website links, any work items that might be assigned to me on the left-hand side here. I've got my company ID if I'm operating multiple legal entities, got my company ID, which we can restrict through controls, so users can only have access to the relevant companies, etc. And I've got my navigation for my specific modules here on the left. So my burger bar, what we refer to with all my module activities. Just one thing to call out, I'm in a system administrator role for the purpose of this demonstration, so you're seeing a lot more than a typical average user would see. But that's my module list. The workspaces, which is just a list of the views you see here. Any recent areas I've been on, anything they're favorited if I want to quickly navigate to as well. A workspace, just to give, I mentioned it a few times now, just to tell those who are unfamiliar with them, they are personalized role-specific pages with data, reports and transactions, which are designed to create efficiencies for a user in their day-to-day tasks. So they're typically job specific. Now the ones we're seeing here are out of the box. Just for an example, I'll just show you the employee self-service one. But I will be using and trying to illustrate how you can use the workspace with the upcoming demo for your day-to-day tasks as well. So this is just the generic employee. So one way I'm an employee, typical tasks all employees would tend to do. So submit, create expenses, any work items that they may have that are action to them. So this could be workflows for approving documents, annual leave, etc. from a manager. Again, if I was a manager, I could see overview details about my team, see overview of jobs. So this is kind of an idea of, though it's not job specific, this is an employee specific workspace that gives an employee a kind of one-stop shop for their common employee type activities. Okay, great. So the first thing I'm going to do is throughout this session, I'm going to be in a bit of a credit controller, credit management, collections agent role. So I'm going to do a few activities, which we're not going to go into too much detail, one of which is going to be creating a customer account. So I'm not going to go into too much detail about the actual creation process. What I'm effectively just doing here is creating the instance of an account, which effectively the credit controller can then pick up and carry forward. So I'm just going to create this business demo account now and then give it a group. Like I say, we're not going to go into too much detail on this right now. It's just to create the record for me to then carry through for the demo. So as a credit controller, what I've actually got set up here is I've got some system alerts going on that are going to notify me of any new customer accounts that have been created. So we've actually got segregated processes here where the customer accounts get created, but then the actual credit allocations, management, and actually giving them able to transact with them are separated by two different teams. Quite common, as you'd expect. So the customer account may be getting created from coming from our CRM system. It could be manually created internally within the business, or it could be coming from an integration from another third-party system. So this one here, I'm getting an alert to say my customer account has been created. And then as a credit controller, I'm not going to worry too much about the customer details, but I'm going to move down onto my credit and collections tab. Okay, so as a credit controller, I'm concerned about these details here. So my credit rating I can assign, which could be a third-party credit agency that's using this. The mandatory credit limit, you can assign yes or no. Should customer accounts have credit limits, you can have them yes or no. It's entirely up to your internal processes. Whether it's an unlimited credit limit or not. So typically what you would use for maybe your internal accounts, intercompany accounts, or something where you're not too worried about what exposure you have. And we've got the exclude from credit management. With the exclude from credit management, where you could completely exclude this customer if you like as well. The credit management group is a way of grouping your customers from a credit management perspective. So this would allow you to group your customers maybe from a risk profile perspective, so high, medium, low, for example. But it effectively allows you to group them from a perspective that gives you something more than general customer grouping. So in just an example here, I've got some the high, low, medium risk. So we are, in this case, I could classify the customers. I'm going to say they're a medium risk customer. I'm going to classify the customers from a medium risk from a credit perspective as well. And I'll show how some of that feeds in later. The total credit limit, as you see, this is actually grayed out at the minute, and I can't actually add the credit limit here. And I'll show you why that is a issue, why that's set up that way shortly. So the credit limit expiration date is a user configurable date. Again, I'll show you how that can come in, but that'll feed in later when we actually assign the credit limit. And then the credit limit change date would be an automatically populated whenever the credit limit kicks in. So the last review date, next scheduled review date. So often companies have credit review processes that go on. It could be every quarter, every 6 months, every year, however you want to review, but that's what those dates are there for. So when was it last reviewed and when do you want to next review it? Eligible credit limits. The reason this is different to the normal credit limit, this is how much they're actually eligible for, not how much we're going to give them. So we may give them less than what they're eligible for. And also the currency. The currency just of the credit limit would apply to either the customer's currency. So the currency here that you see, as you can see, it's GBP, and the actual legal entity we're in is TISCA Limited, which is a GBP currency. If it was a foreign currency, it would translate it for us there to give them actual the credit limit in the customer's currency and our credit limit. Now, typically, you can specify the currency that's translated at. It could be fixed, so because you may not want to have that exposure fluctuating up and down as currency exchange rates change. The next one, status. So we've got some account status, the account status reason code, so whether they're on or blocked or not. I know, sorry, there has been a little bit of a delay because I've had my record is created. So this is the actual alert that I created earlier for my customer account, which I was wondering where it was. I actually have an alert as a credit controller. I'd get that alert saying my customer record's been created. So that's now coming through. Must have been a bit of a delay on the server. So the account status, which again is user configurable, but these are a lot of these to say whether they're on hold or not, and whether it's with a collection agency, do you hold titles, certain things like that. Invoice and delivery on hold, or whether you've got the account stopped or whether you want to stop them for certain activities, who the collections contact is at this customer, and if you're going to write off any, do you want to put a default in? You typically don't put defaults in because you'd specify those at the time if you were going to write off any transactions. Excluding interest charges and collection fees, if you applied them, you could choose not to. You could choose to exclude them, which again would probably be something more of an internal trading account where you actually don't want additional charges or interest fees to be applied. Just these bits I've glossed over a little bit because I'm going to come on to them now. So the risk section we have here, which is the year the business was established and the customer created since. Now this customer since is going to create or default automatically to my the date that the record was created. The year business established is when the year that the business was established in. So what these do is these can actually feed into our risk profile. When I'm talking about risk profile, what the risk settings are, if I just click onto the risk score here, is these are effectively internally defined rules and measures that we want to apply to customers to measure and assign them a risk rating. So in this case, we've got a few set here. Now, again, these are user definable, user configurable, and I have got average balances, average days, year the company was established, and the customer since date, D&B risk rating and regions. Now, a lot of these information, so the average balances, average days, are going to come automatically from the trading with the customer account. The year the company was established and the customer since, as you've seen, there's data specified on the record. So if I just jump back onto my record, I can add a date in here now, say it's actually quite a new customer in this instance. And it was 1st of Jan it was created. So my risk score, my D&B risk is one that I've added. Again, you can choose, these are using the definable ones. So I'm actually going to say I've done a credit check, and that in this case, they've given me a D. So these are the D&B risk classifications, and it's a risk classification of 2. The region which it applies, again, you can apply risk classifications, risk contributions. I'm going to say it's UK, so it's risk. You see it's got a risk contribution here of 10. So I'm just going to do, typically you'd have something that runs on an automated batch job. I'm just going to manually push it through so you can see it come in now. I'm going to update my risk scores. So you'd have this, like I say, it can be done on a batch, running in the background every half day, however frequent you want that running. So it can be constantly updating these risk profiles and these risk records. And I'll show you how that feeds in now. So if I just jump back onto my customers now, for the business demo customer, and I go back onto my risk score, you'll see, so it's now pulled through 0 and 0. Now this is 0 because this is years. So this is years since. If I just jump on and show you the scoring groups, this is years the company's been established. So if it's been established in the last year, give it a risk contribution of 20, 1 to 3, 10, 5, and then a similar as well from the trading from the customer's perspective. How long have we been trading with this customer for? They're brand new. We'll give them a 20 point contribution, or we've had them for longer than a year, 10 point contribution. These are contributions effectively mean nothing until you give them a reason, a purpose. So here we've got a contribution of 20, 20 and 10, which has given us 50. Now this risk measure is assigned because based again what your internal requirements are, but the risk contribution factors that you've measured, that you've set to give them a risk rating. I've just got some credit management. I'll just show you where they are. Risk classifications. So then you can classify them. These are the ones that we've configured here of low, medium, high. So as you can say, the record just saying they're coming out with 50 points. So we're giving them a medium credit risk. What that means, and for various other reasons, is as again coming back, I've not given them a credit limit yet. What I'm trying to get to show you here is how you have, by just creating and adding the typical business information that you would have, it allows you to automate a lot of these processes, a lot of these activities. So the risk ratings automatically picked up and assigned. So you're giving them a risk rating based on your internal rules. Credit limits, in this case, I'm going to show you now, can automatically assign. So what I'm going to do, and again, this can be a periodic automatic basis for reviewing, but I'm going to give them a credit limit. I'm going to search for automatically calculated credit limits, and I'm going to run that. And what it'll do is say, okay, I'm going to look at the customers, I'm going to look at their risk profiles, I'm going to look at some other information, the rules that you calculated, I'm going to suggest credit limits for you. So this business demo one here that we just created, it's suggesting a credit limit of 100,000. I'll just remove the others for now. So it's given a credit limit of 100,000. It's saying this is what we suggest based on the business rules you've defined, and also when the expiration date of that credit limit is just over a year from now. So I've, as a user, not specified these, so I'm fine with that. I'm going to post that and apply that credit limit. Now, where that credit limit is coming from is again is based on the business rules that you specify. So the automatic credit limits that we have set here are for the groups that we choose, low, medium and high. So what are my risk groups? So again, we're thinking we've got a medium risk group because of the coming out at 50 points. And also what I'm saying is, okay, if it's a medium risk group and the D&B score is 2, give it 100,000. And this is where it's getting 100,000 from. Now we could build this up. We can add other scoring group attributes. So you can combine both attribute of risk and another parameter if you wanted to basically derive your credit limit. So what this is trying to do is a large portion of customer credit limits are typically calculated in a mechanical manner. It could be that every customer is going to get £10,000 or something along those lines. This removes the need for people to worry and do that. This will automatically do it and apply it, which again just frees you up to spend that more time on your bigger customers, your more frequent trading customers, to apply that more qualitative analysis on what is an appropriate credit limit to give them, because the numbers don't necessarily stack up or give you the indication of what level to use. So that's just to show you there how the automatic credit limits can be done for you. Just bit more on the credit limit, so I'll jump back onto the customer I've just created. And one thing that you can see here is insurance and guarantees. So if you have customers who have insurance and guarantees, you can apply them. For example, I'll just stick one here now. This customer's going to have going to provide a guarantee. It's a silver level. It's effective today and it's effective for a year. And it's for 30,000. Now, how much of this we want to apply to their credit limit, we can choose. In this case, I'm going to do 100%, because it's nailed on. Like we can agree an increased level there. So what we're basically saying is we're willing to give them 100. They've given us an insurance guarantee of 30, so therefore actually their total credit limit is 130, because we know we can recoup 30 from that insurance that they provided. Another way of looking at this is to give a temporary credit limit. So temporary credit limits are, by the nature, a credit limit that is assigned to a customer on a purely temporary basis. So if I give you an example here, temporary credit, I'm going to give this customer just created a temporary credit limit. So the customer account, business demo, it's going to say what a current credit limit is. If there's a from and to date for that, but there isn't, because it's not temporary, and what you want the new credit limit to be. So in this case, I'm going to give them a new credit limit of 200,000. I'm going to give the from date of today, but I'm just going to give it for a couple of weeks. That's because I've spoken to them. 100,000 is fine for normal trading, but they're quite new. They need to do some big purchase to get stock built up, so that's fine. We're happy to take the early risk. May not be something you're willing to do, but in this case, I'm happy. So I'm going to give them a temporary credit limit of 100,000, more than what they're used to. So when I drop back on the account now, just refresh that, you'll see a new field, giving them a temporary credit limit of 200. And what it now does, it says, okay, we're taking the temporary of 200, which is overriding the permanent. Now this could be lower, so the temporary credit limit could be temporarily reducing them as well, but effectively when you apply temporary, it overrides whatever you have set. We're still taking the 30 insurance, so we've got 230 there. Now temporary credit limits, you don't need to worry about managing. They automatically will drop off back to the normal credit limit and expire when the date comes. So it's a good way of temporarily lifting it without, you don't have to worry about managing, coming back, revisiting, putting reminders in, etc. It will just automatically drop back down. You can carry on trading as normal. And so the last thing to cover off in here on the customer credit limits is quite often, and you can probably see a little bit here. So if we say here, we've got 3 customers here that may be related: business limited, business service, business demo. Often you may trade with customers that are actually part of, although they're individual customer accounts, are actually part of the same group or trading group. Now, from a risk exposure perspective, most of the time that means you need to consider the exposure to all of those customers when you're considering your risk, rather than assessing them individually. And what you can do here is, the feature is available to manage that. It's what we have as customer credit groups. So you create a customer credit group and you give that group the credit limit. So what this credit limit is how much exposure we are willing to have for that group of companies. Now, it could be 1, 2, 3, doesn't matter how many companies. That group is 450,000. Now, this isn't the credit limit individually. So you could have, in this case, business limited and service co. And actually, I'll just drop on now the customer created to add it to the group. Business demo. This isn't the overall credit limit that they can have. It's the overall exposure. So each of these accounts could have 450,000 credit limit. But the exposure will never exceed 450, and that'll be because whenever a transaction or a sales order, a sales invoice are generated, the group credit limit and exposure is checked first. So it avoids one, going over exposure by going over the amount, but it also avoids often obscene situations where you're having to transfer credit limits between accounts because your individual credit limits can't exceed the group, etc. It removes that. So on an individual account basis, we may be happy with 300,000, so you can have 300 across the board. You're not having to worry about moving credit limits to allow things to be processed. So that's the way of grouping your credit limits, giving you that extra level of control, oversight. And this also works across company. These customers are all in TSCI Limited, legal entity at the moment, but if you had them across company, different currencies, they'd all come back in and be part of the group. So you are managing and controlling your risk for that group as a whole. Okay, that's a bit of an overview on the customer credits, credit limits. Have you got any questions on that, Fiona, before we move on to the order processing?
Yeah, there's one question, Paul. Are there any reports or alerts to credit limits expiring or approaching review?
There are various ways you can handle that. So let's have a look at one now. So what I would, there's a couple of ways. So I would, I'll show you some features of how to manage. So what I'm going to do is personalize this and add. So what we're looking for is we're going to add a field, and I'm going to add it. Again, this is something an end user can do, and it's credit. So looking for credit limit expiration. So a credit limit expiration date. So I'm going to add that in, and I've added that to my form now. And what I just need to do is save this as a new view. New view. And I can create as many views as I want, so I can tailor these for different activities. But for this, I've created a new view, which is customer credit limit expiration. What I'm going to do now is add a filter of range 0 to 30. What this is going to do, probably not going to record new, is retrieve any records that are within next 30 days, of which case, yes, there aren't any. So if I just up that, I think probably to 180. Yeah, so that's going to do any records that are, any credit limits that are expiring. In this case, the next 6 months. I'm being really thinking far ahead here. So I could have that. And what I'm going to do is, that's great, but I actually want that, save that as my view. I want that to be there, easily available, so I'm not having to worry about it. So what I'm going to do in this case, I'm actually going to add it to my workspace. So I'm going to add it to my credit and collections workspace, because that's typically where I'm going to be focusing on. I'm going to scroll down to my workspace, my credit and collections. I'm going to add it as a tile. Credit limits expiring. Account, and okay, so I can add it there, and then when I drop into my workspace, I have a little count event of my credit limits that are expiring in the next 6 months, and one I can drill into it from there. Or I can also, similar to as you just saw a moment ago with my alert coming through for a new customer record, you can also have an alert set up and create an alert to say, tell me when credit limit's about to expire. So I can go into my options, I can create a custom alert. So what I want to do is, again, I'm looking for credit limit expiry date. So when the credit limit expiry date is due in, and I can say the month. And I can have this alert running, so I can have it send me an email. So as soon as an account comes within 30 days, I could have the total on my workspace to see and manage that, or I could have an alert that pushes something a bit more forceful to say, well, you need to deal with this now, it's 30 days. So a couple of ways you can handle that are there. Okay, great. So what I'll just move on to now is we touched on the credit control, credit limits and assigning them to customers. What I want to move on to now is how we can apply that and other controls, business controls you may want to apply to your order processes, your sales orders, your free text invoices. So what I'm just going to move on to first is I'm going to jump on to the parameters to show you what we have set up. So what we've got here is just to mention I did about the credit limit groups. So check customer credit limit groups first. That's the making sure that if you are in a group, it's going to control that first. But what we're worried about here is the credit limit, is the credit management checkpoint. So what we're saying is these are the 5 sales documents that go through is sales order confirmation. So customers placed an order, we've reviewed it, confirmed delivery dates, and we're sending them a document to say, yes, you will get your order on X. The picking list or release to warehouse, depending on what warehouse operations you're running in the system, is effectively sending us a notification, sending the notification, the CSR member sending the notification to the warehouse operative to say, can you pick this and ship it? Typically, this is the last step because depending on your processes, there isn't another opportunity to stop that order going after them. Delivery notes can be depending on your processes. So in this case, let's say they do. So for me to produce the delivery note, they have to be within the credit limit. So everything's packed up, but I can't produce my delivery note to put on the package and put on the wagon because of the credit stop. So I'm going to add that in here, delivery note. The grace days are if a credit stop, an order fails one of these checkpoints but is approved for release, it's how many days the user has to proceed with that order before it goes on stop again. These are typically low because you wouldn't want what may be a yes, okay, we'll approve it on Friday, Wednesday the next week. You would want to look at it again if it hadn't moved on. It's almost a decision at that point in time. So these are 1 and 2 days here. Can I do the similar thing if you're just doing pro forma documents as well? But typically, as you're not committing to anything with the pro forma, you wouldn't necessarily need to have them on, but you may want to, depending on what your lead times are for some of your shipping activities. So just one other thing to cover off on the setup is if the credit limits, so like I say, you can specify an exchange rate, a fixed one if you like, for your credit limits. Allow manual editing of the credit limits, and that's on the customer record. You can see that's set to no, which is why before I couldn't edit the record. And how do you want to calculate? So we keep saying calculate it, but what are we actually calculating? So what the system's going to calculate is going to take the customer balance, it's going to take the delivery note or the product receipt, because this works for both sales and purchases, and then deduct that from the credit limit to see if there's enough headroom. Anything less or more than that, you're risking potentially not capturing stuff that's in the warehouse and it's about to go, that you're about to invoice, or you may be a little bit too controlled there, like if customers have lots of forward orders on. Ultimately, it comes down to what your business processes are. What's your typical lead time between an order confirmation and shipping, depending on what control you want. Check the credit limit on the sales order and one free text invoice. Yes, you'd want to. And what do you want to happen if your credit limit fails? In this case, we want an error, so stop, as in don't proceed. Don't warn and let the user carry on, just stop. So that's the control points. And then one last thing I just want to show before doing a bit of a demo for you is the blocking rules. So what these are as well as the credit limit total exposure, there's often a lot of other business measures you'd like to apply or at least consider when it comes to assessing whether an order should be dispatched. Just because they have credit limit doesn't necessarily mean you want to release the order. So we've got some examples here. So it could be that you can apply here a control for days overdue. And again, the groups, the risk group or the account group. So this is the credit limit grouping that we talked about earlier that could be pulled in, or the risk grouping again that calculates automatically based on the percentage points attributed for each of your risk measures. What we're saying here, so just an example for customers in the high credit group with a high risk rating, as soon as they're overdue, block them. Do not allow any more orders to go. So it doesn't matter if they go over 1 invoice or 10 invoices, as soon as an invoice goes overdue. You've got the account status, so whether the account's on hold. Similar, if you could set up a custom term of payment to say if the customer has a term of payment, say of H, for example, don't allow any orders to go. Again, that's just there more for different businesses have different processes. Credit limit expired. So just because a credit limit has expired doesn't necessarily mean you wouldn't want to trade with them anymore. Again, it comes down to potentially the risk level of that customer or what your internal processes are. So what we've got set here is anyone who's in a high risk, if their credit limit's expired over 30 days ago, block them. Don't allow any orders to go. Low of 90 days and medium of 60 days. So the one we're going to show here is this medium of 60 days. But just some others as well. You can have an overdue amount as a percentage of your credit limit. You can have, is there a total sales order you wouldn't want to go over, a sales order value, or also do you want a percentage of credit limit? So actually, do you want to have some sort of control or alert when customers get to 80 or 90% of the credit limit? Again, it comes down to what your internal process is, how much lead time may you want, and other things. So what I'm going to do is just show you the credit limit expired. So 60 days for the medium. So I'm just going to go on to the customer that we just created a moment ago. Business demo. And for the purpose of this, I'm just going to force the credit limit expiration date to be in the past. So we're looking at 60 days here. So I'm going to say the credit limit expired on the 1st of December. So what we're saying is the rules we just looked at, we shouldn't be allowed to proceed with an order for this customer because it expired 1st of December, just more than 60 days ago, and the risk medium. So I'm creating a new sales order here. Again, I'm not going to go into too much detail about the sales order because we're focusing more on the credit activities here, but so I'm just going to create an item, give it a price, 1,000. Save that, and then I'm going to go to confirm it. And then confirm my sales order. So if you think back, we've got a credit control point checkpoint on the generate the sales order confirmation. So I'm going to generate this sales order confirmation, and it should, assuming everything's saved as I go through, stop me because the credit limit for this customer is now 60 days over, and it's giving me a warning. So it's saying posting message details. This order has been sent to credit management. Now I can go, why? Because the sales order process, I might not know. So why has it gone to credit sales management? So I can look at my credit management, look at my hold list. Okay, yeah, this is the order. It's gone on hold. The document status it went on hold at, which is the confirmation. I can see some information about the customers, when we're shipping the goods, what's the terms of payment, etc. The credit reason is that the credit limit is expired, which is what we're expecting because that's the control that we've put in place. So although this order is within credit limit, we've got a control to say medium risk customers, because I've got the indicator there, as well as a little quick reference, medium risk credit management group. This should stop this order. I can also, it may be actually on hold for multiple reasons. In this case, it's only one, but if it was, I'd see my blocking reasons here and it would list the various reasons that it would be unblocked. It could be that it expired, it could be that it's over the percentage exposure that we're willing to take, various reasons. And I've now got a work item. So this is what it's actually done, is it's triggered a workflow here. So it's triggered my workflow in the system. In this case, I've got it set up to come to me. But depending on who you are, it could be a finance manager, it could be a regional manager, it could be a salesperson. You can configure that workflow to run and generate and send that work item to whoever it is relevant and responsible for dealing with that customer or that particular action. You can have rules specified on the customer, on the order total, on the step, etc. Various reasons you can have that. We can in the system configure it to you. Not only is it going to send an alert in the system, but it's also going to generate an email alert for you as well. So quite often people performing these activities may not be in the client itself. So if I just for example, just show you the email I just got now for this. I've got an approval notification. Please review sales order 277 and action the credit stop request. So often if it's a finance manager or someone a bit more senior who may not be in the system, it's giving me a link directly to that document in my email that I can go straight to. It's to say to the screen I'm here and take which relevant actions I want to do in this case. Now in this case, what I'm going to do is I'm going to approve it. I'm going to go, yeah, that's fine. I've done my checks. I'm going to approve this order for this. I have to document the reason of why I'm taking this step. Now the reasons you see are for both approval and rejections, but I'm going to documenting the reason you're taking the step. So I'm going to say I'm just releasing it from management. In this case, the customer is a friend of mine, which is really not what you want to see, but let's say in this case they're a friend. Let them have it. It's fine. I'm sure they're good for it. And then that's going to approve. It'll run through again, and then that order can then be progressed on. Again, the user has, based on the grey stage that we've specified, I think we set it as 1 for the sales order confirmation. So they have a day from the point this document is approved for release to actually generate and confirm that sales order. You can automate that as well if you want. Depending on what you want to do, you could have someone come in and do it. So again, being a couple of people here wearing a few different hats, how would I know that that's been approved? Well, as a customer service representative, I'd get an email notification, which has just come through now, which is telling me that the document's been approved. It's been approved for release from credit management. Please click link to complete sales order process. And I'd also get a notification within the system as well here for me to say, by the way, you can progress with this order now. It's been approved by credit management. So if I now just go onto my cell, generate the document. Okay. Hopefully it's all flowed and just relying here on the servers running quickly enough in the background just for it to update. And great. So exactly the same order. It's taken into account the grace period and approval, and it's now approved, and I can continue with that order. Okay. So that's a bit of an overview of the credit limit controls kicking in for the sales process. Do we have any questions on that, Fiona, before we move on?
We've got a question. Can you see a history of customer credit stops?
Yes, you can. So a couple of ways you can see that. So actually my credit management hold list here, again, everything I'm showing you here is out of the box as standard. So I can see all my credit holds, open, closed, or ended up for review. So if I look at my closed holds, I'll see the 2771 that we've just done now. I can see at the end who did it, in case it was released by me as an admin account, when it was done, the reason, which you can obviously expand these to meet your requirements, but the reason it was done, why was it on hold in the original purpose, date, order number, value, etc. The typical information you'd see if you wanted to retrospectively look back and see what orders have been released, when and by who. So yeah, that's available as straight out of the box as well. Okay. So what I'm going to do now, I'm going to be a bit more of a credit collector, credit control operative, and I'm going to start managing some of the overdue limits, chasing some of the debts. So I'm going to be in the credit and collections workspace. So this is the workspace that Microsoft provide. You can add to these, like I already have done with the credit limits expiring in 6 months tile. You can also add more reports. You can get some Power BI reports and push these and embed them in so that they're on users if it's a particular report or KPI you want them to track. But this is the workspace that Microsoft have done out of the box that's for credit and collections. So on the left-hand side, I've got some common activities or common tracking of activities that you want to do. So any customers that are over limit, any open cases that we may have, a bit of an infographic of an overview of how we're looking in terms of our aging. And then we've got some details here around specific customers that are overdue. What are the aged balances and how do they look based on our customers, customer credit limits, etc. Some of the key information that you may want to look and have overview of while you're manage it, doing your collection activities. But also a little bit further on the right, you've got some of your links to your common activities that you may need to perform in that role. One of which would be creating dunning letters. So dunning letters or collection letters are where basically the system's going to automatically generate and send a collection letter to the customer. So I'm going to just generate this now and say any invoices, any orders that are overdue, generate the order and send their collection letters. So at the moment it's just in a review because I'm just going to go walk you through it manually for the purpose of this demonstration. I've just got some here that have been created. So the date of the 23rd, let's just have a look at this Siemens one. I've got 3 invoices that are showing overdue. That's going to be sent. And then now again, I'm just doing this manually, but this can all be automated and processed. It's a collection letter 1, which I'll just show you shortly what that means. But in this case, I'm going to go, yeah, just send it. That's fine. Again, I'm going to automate this process. Again, run it in the background. This batch. I'm just showing you for the purpose of today. When were the postings considered? But it was today. And I'm going to generate this letter and print it. Now, what that's going to do is email that automatically to the customer. So depending on how often you want to send these, it could be once a week, could be fortnightly, whichever. You can have these automatically being sent to your customers to say, by the way, these invoices are overdue. So you're taking that informal, mechanical chasing almost out of the picture to allow your users to spend more time actually focusing on the more personable, time-intensive contacting your customers. So I've just had the dunning letter in this case, and it's come through. Format's not great, but you can do that for your own format. And it's saying the above invoice is now overdue for payment. Please arrange payment at your earliest convenience. So it's a relatively nicely worded letter because it's the collection letter 1. By the way, these are overdue. Can you please pay them? What I just want to show you next is the actual collection letter. So we've got dunning letter 1 there, and what I'm going to go on to is the sequencing. So you can actually order and create the dunning letters that you want to reflect your escalation process, I guess. In this case, you've got dunning letter 1 and the relevant notes. So the first one will be generated as soon as an invoice is overdue. The second one will be generated once the first one's been posted and it's 30 days overdue, then 60 days and 90 days. And what I've actually got set here is if we get to the point where we're sending them the collection letter 4, block the account. And also I've done a note, so your account has now been blocked as a result of the above overdue invoices. Please contact us to arrange for it. So you can tailor your messages and sequence, and you can have different sequencing for different groups of customers depending on how you want to interact with them. So that's your more automated collection letters that you may want to generate. If you're thinking more, okay, I'm actually going to be a bit more hands-on. I'm going to pick up the phone or actually specifically chase some customers. I'm just going to jump back into my workspace. So what I'll do is I'll jump on Siemens here. So I'm going to go on to Siemens, have a look at theirs, and okay, we've got some, none of them are disputed. These are my overdue invoices for Siemens. I'm not worried about them because although that's overdue, it's only a little bit overdue, and that's a green tick. So I've got that little quick reference to know whether I need to worry about anything. And I've got this invoice here. It's quite old. This. So I'm going to see if there's any comments and active rights. There's absolutely no activities related to this, so nothing's been done, nothing's been chased on this. So I'm going to give the customer a call. So I've given them a call. They've said, yeah, we're going to pay it. Sorry, we didn't realize we didn't have the copy of the invoice. Can you resend us the statement? Okay, yeah, so while I'm on the phone, I can send them the statement, and what it's going to do is automatically send statement to the contact set up on the account, which is me in this case for the purpose of this, so I can show you it coming through, but it'll send the customer, the contact, a copy of the statement. This is a more transactional info statement that comes through. You can send them the more company official statements very quickly as well, so I can just jump on here and send that. So I'm just going to do the 2 to show you the 2 different views you can, data information you can easily send. So again, I've literally done that in 3 clicks. I've sent 2 statements. So this could be something done while you're on the phone. Have you got it? Yes, I've had it. So you've got that old verbal confirmation. Yeah, I've got it, for next time. If they are trying to, you know, play dumb and say, oh, I've not had the invoice or whichever, you've got that confirmation now. So if I just, so the first one we sent, which is this one here, like I say, gives a bit of detail. So overview of the aging, some detail into transactions, including how much of it's overdue and what's its past due. So this is an Excel spreadsheet with a bit more detail for them that they might want. But then also I did, just for the purpose of comparison, I did also send them a copy of the more formal customer statement, which you may periodically send on a fortnightly, monthly basis, whatever, to say this is your more formal statement, this is your total outstanding balance. Again, they're all very easily sent from the customer, from the collection screen. In this case, they're going to say, no, we're going to pay it, really sorry. So I'm going to change the status of this. Let's say they promised to pay it, and they're going to pay it tomorrow. I'm going to record it as an action to say, I've updated this because I've spoken to customer, didn't have invoice, promised to pay, and then change the status. So that's now going to change that to promise to pay, but it's also going to create some tasks for me here. So if anyone else comes to this record in the future, they can have a look at this, show me my link to activities and go, right, okay, so we chase them up, chase them then, change the status. They've promised to pay on the 24th, and I can have an alert trigger on that to say you need to follow this up, have they paid? And I can show off some of the specific comments for that. So that's one where, okay, we've got a good relationship with those who are going to pay. Just another example that may have is if we jump on, let's have a look at, let's say Lloyd's, for example. We've had a notification from the business development manager that actually these are in a bit of financial difficulty. We might need to do something to help these guys out. So I'm going to give them a call and give them a talk about it. What's the problem? So look, we're really, really sorry. We really want to pay. We have promised to pay. We're just having real bad cash flow issues. Okay, that's not a problem. Let's see what we can do. So we're really good. We had a long deal with them for a long time, so we're going to do. I'm going to try and do them a favor and say, okay, right, well, let's come to some sort of arrangement. We need to be careful, because if we just force it on you and make you go under, we're not going to get anything. So what I've agreed to do in this case is we're going to write off the 58,000 and the 216. We're going to allow them to pay in installments. So what I'm going to do is I'm going to select the 216 and go onto my settlement. And I'm going to apply a payment schedule to this. Now the payment schedule I'm going to apply is a 3-month. So I'm going to say these payment schedules can be whatever you want. So I'm going to say they're going to pay over 3 months, and the first payment they're going to make is at the 1st of March. And change that. So what that's going to do is it's going to create, due date on the 1st, 5th, and 6th. So what that's going to do is now move that specific one, taking away the 216, and it's going to create 3 lines to represent the payments that are coming through now. So that's now gone, okay, that's been dealt with, don't worry, you no longer, that's been, it's not going to be chased now because I know it's not going to be due for a while. 58,000, like I said, we've agreed to write off, so I'm going to write this off. So this is from my screen, I can write off. It's giving me automatically where you're writing it off to. Write off date, the reason code, so I can add to this if I want, but just there's a default there. I'm going to write that off, and what that's going to do is automatically create, it's going to create the financial journal to write it off. So I, as a collections agent at this point, can't just write off invoices. It's got to be approved by someone else. So in this case, it's going to create the write-off request. It will, again, I'm going to have, in this case, I've got an email set up to the finance manager to say this invoice needs to be write off. Can you please approve and process it? But just for the purposes, I'm just going to jump to my journals. And you'll see at the bottom, I've got a write-off that I've just created, and it's workflow controlled as well to make sure that if that gets written off, only the appropriate person is approving and writing that off for you as well. Okay. So that was a bit of an overview of some of the collection activities. Any questions on that, Fiona?
No questions on that one, Paul, thanks.
No. Okay, right. So a few minutes left. I just want to kind of really show you this, give a bit of an overview. So, like I said, the business configurable business documents that I want to finish off with. It's a feature that's added by Microsoft about a year ago now, and it's just a real push from them to continue with their low code, no code, removing the need for configuring and developing, adding code for business documents. So in this case, it's our output documents. So the purchase orders, collection letters, etc. So what I'm going to do in this case, I'm going to create a new free text invoice template, for example. Just bring that one there. That is there. So I'm going to create a new. So this is the documents that you're seeing. So customer statements, collection letters. These are design. You can design and configure them directly from within the application. So in this case, I'm going to create a new free text invoice template, because what I've decided is with a lot of information on our website that the customers don't actually see, don't actually access. So I'm going to actually, in this case, I'm going to choose my free text invoice template, and I'm going to say I want to add, I'll do 1, 2, 3. I want to add our website to the document because it's not on at the minute. It'd be really useful if they could just see it. We've only just launched a website, whatever it may be. This is just, again, just an example of how we can add a piece of information to a document without needing a developer to write some code for us. So let me just go back on. So I'm on my document now. If I go on to edit, it's going to create it in Excel online. Present it to me in Excel with all the format for me to edit it. So this is the document that's going to get produced and output to these. I'm just going to add on my header and grid line. So what I'm going to do is here, I'm going to add the website. And I'm just going to format it the same, just so it's all configurable. So I've added the URL there, but that's just at the minute some text. I need to actually add it in and reference the data. So what I'm going to do is show the structure, and this is the structure of the document as we look at it. So all the header, range, etc. Now I need to add firstly a cell for this to actually be picking up, for it to actually detect it. So in this case, I'm going to do company URL, which is what we're calling this here. So it's what are we referencing? It's giving it a ID that we can then reference when we're connecting it to data. So that's what the report sees that record as. That is now called company URL, but at the minute it's not pulling through any data. So what I need to do is link that field through to my, so this is my underlying data. So it's all the data that's available to me in this report. Go on to my symbols. You can see there's a lot of data that's available here. So this is to kind of give you an indication as well of how much information is available to add. You can also remove information on here as well, move it around, basically get it to how you want without needing a developer. So you do my website and bind. So actually you're not having a developer. So I've created that bind now. I'll save it. So what I've done is I've created a field called web company URL. I've linked it to the data in the background called company URL. I'm just going to check it for issues to make sure there's nothing, everything's okay with the template. Everything's great, perfect. And now I can publish that template. Yes, I can publish it. So I've edited that template from the user interface. I'm not having to get a developer to write code. Anytime we write code, there's chances are there will always be something we need to write code for, but the amount of that code and the complexity of that code is always going to incur an ongoing cost that we need to consider. So it's just, again, continuing with Microsoft's low code, no code, avoid coding where possible. And this is one of the things that they identified. Everyone always does. Everyone always personalizes their output documents. So why don't we make it so that they can do it themselves? My report format, free text invoices, is now demo 1, 2, 3. I'll now jump into my free text invoices with that new template. And I'll just quickly run a print of that. Now, just one thing, what you will see here is it's going to come up in an Excel format. When you're actually generating them as part of the normal BAU process, it's generating an output in a PDF format, which is obviously what you would typically want your invoices being in PDF. So you're locking in, people aren't editing them. But just to kind of give you an idea, of it coming through, and there we are, the URL, we've got atisky.com that's added on now. So that's an example of how we can use the business configurable documents to tailor our output documents to what we need without involving a developer.
Thank you very much. Okay. The next webinar is on the 23rd of March. Drop us a note at hello@tisky.com if you'd like to attend. And very many thanks for joining us today. Thanks very much.